Welcome back after that short break. We are doing Chapter 6, Problem PA 6-2, Bank Reconciliation. And we have the beginning balances for the bank, from the bank statement, and also for the books from our ledger account, or actually our T account in the textbook here. We're on page 296. Let's see. Under required, it says prepare a bank reconciliation for the month of May. And so one of the things we need to do is look at our bank statement and check to see what items have cleared off of our bank statement. And we can see that of the 5 checks that we wrote during the month of May, those were checks 301 through 305. We have check 301, check 302, check 303, and check 304 that cleared our bank statement. And so that tells us that check 305, which was written on May 29, and the amount of that check was $1,300. Check 305 is outstanding at the end of May. And so that becomes a reconciling item on our bank reconciliation, and we will deduct that amount from our bank balance, because that amount again has already been deducted from our book balance. So we want to deduct check number 305, and the amount of that check again is $1,300. Little short on space there. As you recall, at the beginning of the problem, it says there were no deposits in transit at the end of April or at the beginning of the month of May, but a deposit was in transit at the end of May. And so we need to look at our deposits on the bank statement, and again we see that we show the deposit on May 2nd, which was entered into our books on May 1st. And we see a deposit on May 8th on the bank statement, and that was entered into our books on May 7th. But the deposit on May 29, according to our cash ledger, we had a deposit of $4,000 on May 29. That does not show up on our May bank statement. So that's a deposit in transit. Most likely that deposit hit the bank probably on June 1st or somewhere around that time. So that's another reconciling item, and in that case we would add that deposit in transit from May 29th. We would add that to our bank balance, and that amount of that deposit is $4,000. So we are deducting an outstanding check from our bank balance, and we are adding a deposit in transit to our bank balance. Let's see what else we can come up with by taking a look at these records. On the bank statement, we see that there was interest collected of $120, and that interest was, let's see, there's no indication as to what that interest is for. I have a feeling that there must be interest earned on the account. It's quite a large amount, $120 on a roughly $15,000, $16,000, $17,000 balance in the account. But apparently that's what it is, interest earned on our checking account balance. And so that amount is showing up on our bank statement, and according to our cash account record for the month of May, we haven't yet recorded that into our books. And so on our bank reconciliation, we would add that amount into our book balance. So over on the book side, we would add interest income of $120. Looking further on our bank statement, we see that there was a service charge of $60. And again, that's another item that we don't know about until we get our bank statement. We don't know what the amount is until we get our bank statement. And so now that we have our bank statement, we're doing our bank reconciliation, we want to take care of that service charge on our books. And so we would deduct that service charge from our book balance. And that's a $60 service charge. Now the last item that shows up on our bank statement is an NSF check. An NSF check is probably a common item for many businesses that receive check payments from customers. NSF means not sufficient funds. And so what that means is that that had been a check that we had received earlier and had deposited into our bank, and our bank had sent that check along with all the other checks that we had deposited. It had sent that check to the payer's bank, the individual or company that had written that check to us, the payer. Our bank had sent that check to the payer's bank for payment, and the payer's bank looked at the payer's account and found that there was insufficient funds to pay that check. And so what that bank will do is send it back to our bank, and our bank will then deduct that amount from our account balance, since they had previously added it to our account balance when we had deposited that check. I hope that makes sense. At any rate, an NSF check on our bank statement means that we got a bad check. The bank has deducted it from our bank balance, and of course we need to go and try and collect on that check, get a replacement check from our customer or whoever it was that had given us that check. For our bank reconciliation purposes, we need to take care of it. And since the bank has already deducted it from our bank statement and from our bank balance, we need to do the same on our side. And so we need to deduct that NSF check, and that check was for $280. So, looking at all of the items that have been presented to us in the problem, and again, they're basically giving us a picture of our bank statement and also a picture of our ledger account for cash. We can see the various transactions that had been made and recorded on both sides, both what we had entered into our books and also what the bank had entered into our account on their records. And so these should be all of the reconciling items, and what we want to see when we add up both columns, the balance per bank and the balance per book, is an adjusted balance in both columns that is the same. And so let's do that. We have an adjusted balance on the bank side of 17,180, and on the book side also 17,180. And so it appears that we are okay. We have reconciled our bank account. Again, a quick summary. Our bank statement showed a balance of 14,480. Our adjusted balance is 17,180. And our books had shown a balance of 17,400. And after adjusting for 3 items that showed up on our bank statement, our adjusted balance is also 17,180, and so we are in balance. And we need to make our cash ledger account balance equal to the adjusted balance, which is 17,180. The next step is to journalize the adjustments that need to be recorded to make our cash ledger account balance correct. Now, the common error that students make is they want to, many students feel they need to adjust for the items that show up on the bank side. We don't adjust for any items that show up on the bank side. Keep in mind that we are adjusting our book balance, and so the only items that we make adjustments for are items that show up on the book side of the bank reconciliation. And so we have 3 items to adjust. We need to add the interest income, the interest earned on our checking account balance. We need to deduct our bank service charge, and we also need to deduct that NSF check. And so each one of those items becomes a journal entry that would be journalized and posted to the ledger, and they would become a part of our permanent records. And so we do one at a time. Our first adjustment is to add to cash. So we will debit cash in the amount of $120, and that item is for interest income. So our credit is to interest income, a revenue account, and that carries a credit balance. And so I think you can see that that entry, first of all, is in balance, and it makes sense. We're adding to cash for interest income earned on our checking account balance. Our second adjustment is for bank service charge. That is a debit to bank service charge, which is an expense account, and that's for $60. And our credit, since our cash balance is being reduced by that service charge, our credit is to cash. When we credit cash, we reduce the cash balance. And finally, for this NSF check of $280, our debit, now this is probably the Of the three adjustments, probably the hardest one for most students to figure out. What account do we debit for that $280? Well, since we had received that amount probably from one of our customers at an earlier date and deposited it into our bank account, now we find that that check was a bad check, and so we have it back. We have a worthless piece of paper, basically, and we need to collect on it from our customer or whoever it was that had presented us with their check. And so what we're going to call it for now is accounts receivable NSF check. So we have an account receivable, an amount that is owed to us by whoever it was that presented us with that check as a payment. And the amount of that check is $280. And again, our credit is a little bit easier to understand. That NSF check reduces our cash balance, so we credit cash in the amount of $280. And so we have completed our bank reconciliation, including our 3 adjusting journal entries. Now the rest of the problem asks you for some other information, which I think you can figure out on your own. This is the meat of the problem, which is basically preparing the bank rec. Thank you for your attention, and we'll continue on with another lesson shortly.